There we go. Right, get rid of the music because that didn't work out. And let's close this up for now. Right, Bitcoin. So we were expecting lower prices the past couple of weeks. Wanted this to be some sort of wave 4. The only thing we discussed last week was that this bit of PA here is taking far too long to break this low here. And usually what happens when you get shit like that happening, price may tend to go higher instead of lower. So that's something we have to take into account, where price is only consolidating. Maybe a flat type of structure here, we don't know. But all it has done here anyway is rebalance FEGs in here, you agree? It's not showing us any signs that it wants to go lower. So it took a previous daily low, which we mark here as draw 1, the first draw on our liquidity. We had one a bit lower, but it's not showing the willingness to go lower. This long candle from the other day was apparently just one big seller. No, nothing fancy, nothing major. So if we expect lower pricing on BTC, the first thing we looked at was taking, when you have candles that are as long as candles like this long candle here, it makes it a bit more difficult to identify market structure shift, right? Because we use FEGs for that. So what we do instead is we take 50% of the candle, which I have here, and as price trades through 50% of that candle, then that gives us market structure shift as opposed to us waiting for price to close below the actual FEG. So 50% of a long candle would give us market structure shift. And at this point here, when price started to close below here, and this FEG in here, this was a sign, right? We may have wicked up here, but this was likely, price wasn't going to head a bit any higher. We needed liquidity lower in order to head higher. So we've done that now. It's balanced. Let's see how accurately it's balanced, this FEG. Pretty accurate, right? Let's take a look at the low of this down candle is 21,883.20. The high of this FEG 21,888. Right? I think there's a difference of 20 cents. Right? But it has previous price action in this candle here, so you can consider this a balanced range. Now the question is, do we head lower or higher? We had this bearish dealing range here, which was basically from this leg here to the bottom of this leg. And if you saw when we marked out exactly 50% tap and price moved away, we broke a balanced price range that was inside here with speed. This was the BPR up here. This was equilibrium of the BPR, broke down with speed. Now usually these gaps can stay open or they fill and then price moved away, which it did. Now, like I said, this is too slow for me to be, there's no displacement in this. Usually we'd look for displacement if we're looking for something to head much lower. So if it's not displacement, then what else can it be? It may be a market structure shift below the 50% of the candle, but this looks more like retracement instead, right? So retracement means higher. So until we break here, below here, I'm not too convinced that this can head lower. So that's something we'll have to watch out on the low time frames, especially for BTC, that we've seen this type of PA before. We've seen it 2019. Let's see if we can go back and have a look at it. where you get that kind of shitty PA, and there's been a lot of comparison to shit like this. Was it here? Is it this? Comparison to this, right? You got that shitty move down, and then we started to consolidate and then push away. So that's something we have to watch out for, because the only difference I see here is that this was bull market, right? The difference here is that this is doing this in a downtrend. So I'm not too sure how strong this move actually can be if it heads higher. In terms of Elliott wave count, this is starting to push the limits for a wave 4 if we expect a wave 5 to go down. In terms of price action, we've got the models that we know and love happening here. So if we broke the failure swing here, then what we would be looking for is retracement, right? This would be bullish retracement in order for price to head higher. So it can head down correctively, which it may want to be doing. And if it does that, it gives us more, what's the word I'm looking for? It gives more strength to the idea that BTC may want to push higher afterwards. So correctively moving down, not overtly or overall bearish. It's just mere retracement of the entire move up. Down here into this BPR that we left. Maybe breaker vibes here, and then may want to push higher, because like I said, giving us the model that we like to do something like that. So something we'll have to watch here. The other tricky thing about these kind of whoa, hold on, what's going on here? The other tricky thing about these kind of sneaky moves is you have this long candle down, right? And then you start to correctively move upward. And then you get to this point where everyone starts to think that this is all rebalancing. And suddenly you get a God candle coming in there. So we're going to have to watch out for this PA coming up this week. And we'll have to time it with DXY and the indices. Let's see if ETH is any clearer for us. Not really clearer either, but ETH looks like it may have the propensity to move one more push down. So that may give us the second draw on BTC. Now if we look here, what do we see on the move up on this side here? We see that we had market structure shift occurred here, you agree here, right? Opposing FEGs being closed above, market structure shift, and we had order blocks being created before market structure shifts. So these order blocks are most likely to get raided. We did have a piece of price action that pushed down here before it continued higher, but I would have liked it to have done it after it broke here. So we did this. If it did this and then moved up here, I would have considered that price doesn't have to come back here before moving higher. The fact that it did it here before and then moved higher means that this gives us a gap for price to come all the way back here. So ETH, yes. Someone say something.
Yes, avoid.
Avoid.
It's a void, right? A gap, a void, yes, which has to be completed.
You're talking about a void or imbalance? You're talking about liquidity void because there was no price action in here.
Yes.
Yeah, I agree with you on that one. So besides being market structure shift, OB, all of the things we like here, we want price to come back in here and fill this area up. Now it would be nice if we could fib this. Let's have a look at the fib here and take a look at what actual fibs these were. 79% we'll take. Yep, 79%, right? So 70.5 not quite tapped. We paused at the what is this? Golden zone, 65%, 61.8. I'd look for one more push down, but I'm always wary of that one more low syndrome that we always tend to lean towards. One more low, one more low. So what we're going to have to do is we're going to have to start watching the low time frame price action. So if we consider this to be bearish, then we need BTC to take out. So we had a move like this. Price came down here, didn't quite break any failure swing lows here, so not overtly bearish. But if it did something like this, I'd be bearish for BTC to pull back here, especially if it comes into a place where it hasn't tapped that order block quite yet. And we would consider that order block to probably up here. Give me a second. Right, tap at least into this. Head down lower and then come back and tap into this. Right? So this would then mean we have liquidity engineering taking place here above these highs. We head down lower here. We break the failure swing lows. We get this spike up, which taps into the order block, takes out the highs here. But what this also gave us when we broke the low here is a dealing range from here to here. And then, you know, with dealing ranges, we love them. All we had to do is fib it to wherever it goes, however low it goes. Let's call it a dealing range. And we look at least 50% of the move being retraced to. But in this situation, we want it to come a bit higher. Tap the order block, fill in any retracements, imbalances here, and then head down lower to our draw 2, right? Second draw of on liquidity, which was a daily failure swing. So we always target the failure swings because those are the lowest hanging fruits. I'd rather target the failure swings than the actual lows, because failure swings hold liquidity, right? Let's go back to that particular price action there on those lows as well, because if we're looking at that price action on ETH as being a void, liquidity void, then we have OLR here, push here, and we want these order blocks, any order blocks created inside here, to be raided. Again, if we look down here, market structure shift occurred at this FEG. These order blocks, this candle, maybe the consequent encroachment of this candle here, 50% to be raided. And this is only in a bullish scenario, right? Which means we raid that and then we move higher. Once we start to break below these lows here, it's a different ballgame altogether. Because this low is a failure swing low. So once we start to break here, we're in the model or territory of the model that we like, which gives or leaves a gap open for BTC to do something like that. There's 50% of your BPR. There's liquidity engineering, if you ask me here. Failure to go higher, a lot of stops. So it becomes resistance ideas here, right? Where retail traders come in with the mindset that that zone is extremely resistant and price shouldn't head higher. But if we start to do something like this, and especially if we break the failure swing lows here, so if we had to do that, and ideally you want to see candles close. I don't want it to wick and then move away. I want to see a few candles close below here. Then I'd look for something like that. Now, you may not like the idea, but there is tiny imbalance all the way up here, if you can see it. So don't be alarmed if BTC does go all the way back up there. So the idea here, especially if we break the failure swing lows, we're looking for reversal types of structures here to play this move up, take out any liquidity created here, 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 with an eye out for filling or rebalancing this particular range all the way up here, and then we roll over. Got it?
Yep.
So sequence of events that need to happen, you know, if we break the failure swing low, then we look for the reversal type of setup in order to take out, let's call it early shorters, right? These guys are all early shorters in the scenario where we are bearish. We take out the failure swing low. We then go back, sweep all the liquidity, and then we head lower. Always wary of this three-wave move down, especially this guy. This guy generates a ton of liquidity above itself and here. So that's what we look at BTC. Let's take a look at some indices, because there's a few things I wanted to talk about that I let's have a look. Right, let's hop over to, let's say H4 for now. Again, if you look at indices as well, very sort of lethargic on the way down, right? Nothing too violent. And that's an alarming thing when you look at things like this and you want to be bearish. Because if you don't see displacement, then all of this is pure pullback or retracement. So we had an accumulation phase from the bottom here. We had all of this manipulation phase down here. And we seem to be in some sort of distribution phase that's going on right now. Now, what I want to draw your attention to is dates in time. Let's look at the end of January, beginning of February. Right. So what you get is, you know, you get daily Judas swings that take out previous daily lows and then head off in the other direction. Swings that you saw here. And we saw this one the other day. If we look at the date on this, this should have been on a daily, I think it was the 1st of March. I just have to go back and double check that, right? But what that actually did was it gave you a monthly Judas swing where it took out previous lows. Let's have a look here, 1 month. Here, right? What did this do on this date here? On the beginning of March, we take out Feb lows, which is what we saw. I'm going to circle it here, go back here. Right? It's this guy here. This guy takes out Feb lows in the starting of March. This guy. And then we see all of this happening. So that tells me that that was a Judas swing, taking out liquidity, getting people to think otherwise, and then now we're heading in the other direction. Now this can lead to two things. It's going to lead to all the liquidity created here being taken. So we've seen this on the menu, all these failure swing lows, these highs, and possibly this. Now, if we are a bit more bearish, if they want to be more cruel, they'll take it all the way up here. On a monthly, we'll look at what is 50% of Feb's monthly candle. %50 puts us around here. Let's have a look. You understand what they did there when I say they Judas swinged Feb lows and then they ran it the other way. On the daily, that puts us all the way up here. Am I right? Dashed line, yeah. There. That's most likely where they can take indices or price to, which means DXY is going to show more weakness in the coming week or two before it shows strength, which means we have to look for the setup of longs into the level here at least and time it with DXY strength around the first, say second to third week of March. And how can they possibly do this? Now, if we go down to a lower time frame, we had this move up here giving us the model that we like again, right? But we can't have or think about this giving us this retracement right now. If it does, it's a gift because this is next. So most likely what is going to happen is that it's going to retrace to the breaker, FEG. There's your breaker here on, let's see H4. Let's see where I pull this breaker from. Right, H4. If it does give any retracements, it gives it to H4 and FEG. So this is the unicorn setup that ICT talks about. A breaker plus FEG, you take that shit. Don't expect this to come all the way down here like we always do. So this comes here and then we shoot up this way. Creates liquidity here and then later on we start to take it. Whether it wants to go a bit higher and take these out, we're not sure yet. Whether it wants to go even higher and take all of this out, not sure yet. But what we can plan for is, when we take a look at DXY, if it comes back to the breaker, we're going to be looking for longs here to ride it back up this way and later on do that. Let's have a look at DXY. Where do I have it? Yeah. Now I expected more strength to come into DXY much sooner. So on a higher time frame, we have the model again, right? And price displaced. Now notice what I showed you in the previous example. This is where we are on DXY, on NAS or indices, right? Notice that it didn't come all the way down here before it went up. It came here, it came down to breaker, and then reversed, which means it may want to do that next, which gives us a much lower move down on DXY and a much higher move up on indices in the coming days. Now, if we look at the H4, what I actually wanted on H4 was a bit more bullishness. We've taken a failure swing high here, but what this could also be is price just taking this liquidity out here, tapping into the order block, and then rolling over. Now, if we start to, around these order blocks here, start to find strength in DXY and reversal types of patterns to do that, then I'd look at shorting NAS. But if we start to fail here, then the next draw on DXY is going to be much, much lower, all the way down there, before we get further strength coming in on the DXY long term. Right, so it means we go all the way down here. Again, market structure shift OB all the way in here, and then we start to head higher. So interesting week coming up. I think there may be FOMC this week as well. Order flow for now is bullish, and they're playing a game here. We expected lower pricing here, but the monthly swing on the Judas swing on the monthly reversed it, ran it up higher. I expected some strength to come in the DXY, but the indices weren't having any of that. So like on DXY, if you get a retracement back here to break a block, it's where we'd look to long. And I won't be looking to short any of this until you see some valid things happening. Let me just go down into low time frame and show you what stalling looks like. Let's go M5. I'm gonna double check that I'm recording here. There we go, it's good. Right, I was long here. Right, there's the model again, all the way down here. And within that, we had this show up. Now let me show this to you. We had failure swing, OLR. We had market structure shift occurring in here within this FEG. Here, let's zoom in there. And price moved away. But you guys know, and I always tell you that, OB not tapped. Wait for the OB to get tapped before price moves away again. So my entry on this long was exactly when it tapped the OB here and price moved away. Now I didn't expect this to happen in the next day in New York, where they run it back lower again there and then push it higher. But still long. We expected them to come into here and stall. Let's have a look. Make it red. Come in there and stall. Now let's look at time here. Time is going to be very important. $8.15 opens up here. So at 8.15 they run price lower, take out this guy, consolidate. Now at this point I'm watching this, right? And let's see if I can show it to you here. I'm watching this and I'm thinking DXY is making higher highs, but NAS is not making lower lows. And I told you that you may need to watch when shit like this happens. All we do is we draw the range out and we look at 50% of the consolidation. So if you had to fib this out, use this as your range. There's 50% coming in here. this is where you'd need to look for entries if price starts to expand outward. I think I even said that we either look for expansion out, or we look for the liquidity run down and then the push up like that. I'm not too sure if you remember that on, when was this, Thursday, right? Equilibrium, so consolidation seeks equilibrium. So there's a consolidation here, there's your equilibrium in here. So equilibrium being 50%. Price expands out, draws back into the 50, and then off to the races. Now, let's get rid of all this. Here's where the tricky part comes in. We were looking for NAS to head much lower on the day, looking for it to take these lows out and come down to 11.7, 11.6. At this point here, when it rebalanced the FEG, and I'm going to mark the time out here now. Let's call it 11 and 1:30. In this range, price will look to rebalance any FEGs, and as I shorted here, we had a move down because I'm starting to look for, beside fib levels, which I can't show everyone right now, I'm starting to look for down candles that broke highs being traded through, which we got here. And as price came here, look at 1:30 when the macro is completed. At 1:30, we get this. So this is what I'm talking about. Even when you look at BTC as an entirety all the way in here, when price starts to stall like this, it's never a good thing. It means that you need to reconsider any trades that you are in, especially if they are counter trend. So if I was looking in my position, looking short, stalling like this doesn't help the cause. I should have actually gotten out here when down candle highs were being traded through, and looked to have gone long and seen what's going on here. Because if you look at the delivery that's occurring right through here, especially from here all the way up here, can you see any down candle lows being traded through? Can you see that? Or being closed through? Only here, right? That gave us a bit of a bearishness overnight. And then let's zoom this a bit more. Once up candle lows being traded through only occurred here. Once down candle highs are being traded through, that's a sign. You need to be exiting positions and repositioning higher. So market structure shift occurred here, price moved away, pull back into the FEG here, and then gone again. So watching in in an upward move, watching the lows of up candles being closed through is what we need to be looking for. And none of that occurred in any of this delivery going up here. It occurred after 4 p.m. So nothing in New York. After 4 p.m. you got all of this in the extended trading hours. And then in London, Asia and London, you got this happening. Let's put that on Asia and London. Right, Asia came in, rebalanced itself, didn't take the lows, and London started to move higher. Now London wasn't, now this kind of delivery is a bit tricky because London wasn't particularly balanced either. So we had 4 p.m. close here, 4 a.m. open here. Let's have a look. 4 p.m. here, 4 a.m. here. See if we can block that out. So the last point of order flow that price knew was this high. or this high. Can you see that? All it did was last point of order flow and continuation. It didn't have to go lower, it didn't have to do anything else. Kept with the bullish momentum and carried on. So, two things, I think I always stress this. You're always looking for price to be where you need it to be at the right time. Time is very important. There are times that you need to be aware of times that I can't give on this live. But there are times you need to be aware of. If you're using Asia, London, New York, times within New York, you could use ICT macros that he has. They're very, very close to the times that you should be using. Not quite there, but you could use them. But more importantly, as price starts to deliver itself, you're always watching the lows in upward movement, the lows of up candles being closed below, or the highs of down candles being closed above. Because like I've said before, once you start to get highs and lows of these candles, so highs of an up candle being closed above, that goes from market maker sell model, change in the state of delivery, there's your line in the sand, to market maker buy model. Can you see that? So it makes the highs and the lows of these candles very important. So as I like to mark them off, as price is moving and breaking highs, I'm marking things off like this, right? I'm marking the low off, and usually I add something like this in, and you can see how it serves as sort of resistance or confirmation that this M5 low was broken below, price pullback, and then continued lower. Same story for lows. Let's do this. There's the down candle high that I'm watching, right? Draw it out in time, and you're watching for that. Can you see that? So it comes back to support and resistance ideas, that these highs, the high of the down candles, become sensitive to price, just as the lows of the up candles that break the highs become sensitive to price. Because once price starts to move above them or close above them, it gives us a change in the state of delivery. And if the state of the delivery was down, this change in the state of delivery means now that it's going the opposite way and upward. So if you weren't aware of that, you are now. Highs and lows of up candles, highs of down candles. Right, let's have a look. I don't think I traded much on Friday. Let's put this back on before we head over to something else. This Friday, London, I think we did this one already, right? Order point of order flow. Right, so let's take this off because not everyone needs to see this. Before New York opens, the range preceding it, the delivery was almost one-sided. So before New York open at 8:30, what does it start to do? Before 8:30 is here. It started to make itself efficient. So one-sided delivery makes itself efficient, price moves away. Now, you can only be bearish here. You have a candle's high. So let's say we have this high here, right? And the candle that broke through would be this guy here probably. Let's have a look. I'd like to say this guy here. And you notice that whilst I'm not interested in the actual high of the highest candle here, I'm interested in the candle that broke through the high. I'm interested in that low of that candle. Let me zoom in a bit more. The actual candles that are breaking highs and lows. This guy with speed. I'm watching his low. His low got traded through but not closed through. So closing through, very important. You're going to get a situation where you start to wick through but not close through, and then price reverses. So you can't be bearish in this case. Even if you were bearish, your stop would have to be here, and then you would have got taken out there again. Look again, situation, a high, the candle that broke the high, there's his low, it gets traded through, price moves away. Now, even if you don't use this concept that I'm showing you now, you're going to use ICT 2022 mentorship model, which basically tells us when highs are broken that leave an FEG behind, that's where we enter. See that? Price moves away, pulls back into the FEG, gone. Price breaks above, creates an FEG, price pulls back into the FEG, gone. So that's the type of concept that you have to be aware of. Right? So high, the candle that breaks the high, that's the candle that you need to be marking off. So in this situation here, I'm marking off, it's a bit shitty, but these candles here, we'll probably have to go to a higher time frame. Let's see M15 here. So we're marking off, let's have a look. I'm looking to mark off, if you look at a high here, this candle broke the high, I'm looking here. When price starts to close below here, then I can get a bit bearish for low pricing. But as long as it's just wicking through here, I'm not bearish at all, because it could just be rebalancing into an FEG and moving higher. Does that make sense? Right. Anything else you guys want to look at? You can name them now. We'll have a look at it.
Can we look at nat gas poison? There's
Yeah.
a couple of things regarding all of these concepts.
Yeah.
So we had a range first. So
Let's get on to net
daily
gas.
chart, right? 'Cause
Yeah.
for me, this is going to be a bigger swing. So we have a range that was created that first half of February.
Right. Let's look at first half of February here.
Yeah. So that range to the left, and we've now broken through it with strength, right?
Let's look at, yeah.
So the low of the candle that broke through is around, I think, 261, 262.
Right, so let's call it,
if we look at the range, the midpoint of the range, that one, right? Yes.
Yeah.
The midpoint of the range is around 254, 253, I think, and that also corresponds to, I think, a daily FEG.
Yeah, in here. So what you notice in here is FEGs can come in the form of three things, right? A normal FEG that we know and love, like this guy here.
Yeah, and then that volume imbalance, or
right, and then you get an opening gap, which is the difference between yesterday's opening price and today's opening price, and then obviously volume imbalances that occur where there's only wicks and no bodies. Now these need to fill. These have to fill with bodies. We can't leave wicks behind. So when you start to see this guy like this, know that at some point this is going to fill with the body. Now, remember what I said about DXY and the model that, this is the model that we love, right? There's your market structure shift. There's your OB in here. That wasn't tapped. But it doesn't mean that this has to now come and do this before it does that. You agree?
Right, and I'm looking at higher now. So my point
Right.
of entry keeps moving up because it just doesn't. It's not giving me any real action to come down. Right. So yeah,
Right.
my point of entry now is around low 250s, high 240s is kind of the.
Right, but now you got to start. Yeah, now you got to start thinking that you see these candles that do this kind of algorithmic movement. Look at the delivery here now, right? We're looking somewhere around here for that volume imbalance. Am I right? Somewhere around here. But the delivery is giving us propulsion block candles where order blocks are being created, right? Price is breaking through. So whether you want to use the concept I just showed you, or we're talking ICT 2022 FEG model concepts, these become propulsion candles because these order blocks are being created, price is pushing through them, the tops of these become sensitive to price. Can you see that? You see what I'm talking about?
Yeah.
These are
And this is where I always run into trouble is like what time frame, right? Because if I'm looking for a swing, I'm looking more. Yeah, I mean the 4 hour this would work, but also the daily there's still all those voids, right?
yeah, but
That big volume
like I said,
imbalance.
these don't have to come and fill immediately. Now you got all
Yeah.
of this efficient price action, right? All of this is efficient. There's no imbalance anywhere in here. In fact, all the way down here, up to here. But on a higher time frame, you're seeing the volume imbalance created here. Let's mark that off.
444.
Right, we're seeing that volume imbalance in here. Mark it off in red. Now remember what I told you, that the hope is that it does something like this, but the more likely scenario is if it didn't do it already with all of this efficient price action up to here, is that it may only do this and then do that.
Yeah, and that would be 50% of the range and filling the volume imbalance,
Yeah.
right? So
Yeah. So
you got.
yeah.
I'm not waiting for it to go lower this time. I'm gonna.
No, so we're not waiting for it to go lower because we want it to come up to, I think we said 360-ish, somewhere here.
Yeah, 350 to 4, depending on
Yeah, somewhere
fibs
there.
and that mid range to there. Yeah.
Correct. So we want it to come up to there before we can get it going down any lower. And these things don't behave the way you want them to. I wish we could find more examples of shit like this where.
So lumber followed a very similar pattern, right? So that's kind of the fractal I've been keeping an eye on. So if it follows lumber, it's going to go up to 350 to 4, and then go back down to that 160 something level that we marked out the first time we looked. And this is the problem with the lumber chart; it stops. But you can find examples online where they have all the shit to the left filled out. So.
Yeah. So don't expect, it would be silly of them to run it all the way back down just to go a bit higher again when they've already created the momentum that they have created. And you're at a position here where now we're filling volume imbalance here, and it's a place where it is likely to, or can likely, pause or stop here, right? There's a volume imbalance. It's come back to fill it. So we could turn from here this week, head down, for the beginning of the week. If this is a new weekly candle, then doing this would only mean that it's that move there. It's the wick, and then we continue with the body here, and then we end the week off with the wick up wherever it wants to go, right? So moving lower in order to move higher, perfectly fine with me. But we're watching this volume imbalance here, especially this FEG. Now let's look at something that I like to watch for the overall entry. So if we take from the failure swing to the bottom of the failure swing, this is actually where I'd look for the entry long term to form at the 50% of the OLR. There.
Hold on, please. I've got to take a call. I'll be
No
back in a
problem.
minute.
So this concept, if we go back and take a look at this concept here, every time you think you want to enter into a position, right, you look for, let's try and find something here, something that I know I've used and entered with. Let's take a look all the way up here. Could use it there, but let's have a look. Trying to find the one. Where did I enter before this should happen? Somewhere here. Is it here? Can't remember. Let me just check something. Just short there. Weird. Let's take a look here. This should work out here, right? So you had a bit of consolidation happening. Price is headed down. You add a key level here, and then you get a run off the level, right? And then suddenly you get this move coming happening, which runs the high here. So dealing range, right? Low taken, high taken. You agree with that? What I like to do is I take, using body, from the top of this move that led to the low to the bottom of the move there, body to body, we mark off 50% of that. So I'm looking, because if we're treating this as a range, and ranges love equilibrium, or consolidation seeks equilibrium, then I'm looking for equilibrium tap and move. Now let's take a look at real time or real price action, how that works out.
All right. Sorry about that.
No stress. So if I'm looking at consolidation that happened, and then a run off the low, I'm going to take 50% of the run down. Let's call it this, right? Mark off 50%, and that is where your entry is going to form, because 50% of the consolidation or the range, equilibrium is, give me 1 second, there we go, right? Consolidation seeks equilibrium. That's just, and ranges seek equilibrium. So if I'm taking 50%, like I said again, you had consolidation, then you had the run. Now listen where it all fits in, right? the candle that broke the low is this guy, right? There's the lows. This is the guy that broke the lows. I'm interested in its high being traded or closed above. Happens here. Change in the state of delivery. I'm looking at the OLR leg, body to body. I'm marking off 50% of that leg, which gives us this guy here. And if I treat that as a consolidation, then as price comes back into it, I'm looking for that to be my entry. So there's 50% of the OLR from here to here. There's 50%. See what happens here?
Mm-hmm.
Can you see that, al dente?
Mm-hmm.
Then what do you need to look for? So you've got price coming back to a point that you had marked off. You're either going to enter here and your stop's going to be below here, or you're going to look again, candles that break the low, get traded above, pullback, OB, gone. Change in the state of delivery happens there. See that? That's second confirmation. First was actually 50% of the range being traded through or to, stops below there, I enter here, I look for that. Now you're going to find this RD50 concept everywhere. On BTC, I think I showed it to you on CRV the other day. I think I showed you a ton on CRV. Sloth will come back to Natgas just now.
No worries.
Was it CRV? Was it CRV or was it Maker? I can't remember.
It was CRV. Maker we didn't make.
I'm sure we did. Let me have a look here. I think it was CRV though. But I don't know what the time frame was for that, to be honest with you. Can't remember it.
We made
Because I had the
CRV and Didix.
Sorry?
CRV and Didix you made.
Yeah. Yeah, here. It was this guy, right? Here's the, here's it again. And I think this one extended so much in time that it became resistance through the entire thing there. Right. So if this was that, this was the liquidity run, this was the candle that broke through it. I'm watching its lows there, but I'm watching 50% of the entire run up as a range, marking it off here. As price comes back to it, what's happening? See that?
Mm-hmm.
Same story here. There's your consolidation. There's the run lower. Candle that broke the low, I'm watching its high, getting traded above. I'm looking for 50% of that range, down, body, to body gives me this guy. Draw it out in time, be patient, and we get this, right? All of that. And then you get a move up. Go down even lower time frame, and I promise you, you'd see even more or better ones happening here. Look here. So let's consider this the move. Let's consider this the range. 50% of it happens here. As we start to break down, below it especially, any move back, look at it. Simple enough concept, right?
Mhm.
It all has to do with ICT's four tenets or elements of a trade setup, right? You get consolidation, retracement, expansion. What is the other one? Give me 1 second. Where's my PDF here? Mine's drawing a blank today. Al dente is supposed to know these things already.
What?
The elements of a trade setup for ICT. I don't know why my brain's got like, looks like pregnancy brain today. Hold on 1 second. And then we'll jump back into nat gas just to finish that off there. Can't believe I can't remember this. Right.
I don't know what you.
Sorry, what did you say?
I don't know what you are looking for, what you're searching.
No, the elements of a trade setup. Remember I tell you equilibrium, consolidation, retracement, expansion, and reversal, right? Reversal is the fourth one. Sorry, that's it. Elements of a trade setup. So if we looking for consolidation, two things are going to happen. Expansion. So if that's the consolidation, that's the equilibrium. Price is going to tend to bounce off the equilibrium either way, right? Before it moves. And after it moves, price doesn't just reverse from or expand, reverse from consolidation, right? Reversals happen at liquidity pools or areas of liquidity that get taken and then price moves away. So once you start to see expansion happen from consolidation, we mark off the 50% because that's where it becomes price is drawn to equilibrium of consolidation before moving away. So that's the concept that we're using with these 50% of the run that leads up to the liquidity grab. And we're using body to body because that's where the bulk of the volume actually is. So if you look at it, consolidation, the liquidity run, we get the reversal. I'm only interested in body to body of this move, finding the 50% there. Consolidation seeks equilibrium, tap it, move away. So this is why this concept actually works so well. It's because of ICT's elements of a trade setup that expansion or consolidation would seek equilibrium, and price doesn't just reverse from consolidation. Reversals only happen at liquidity pools. Right, back to nat gas. Yeah, so slot, we'd be looking same setup here at the RD50 that I just told you about. If we took from here to here off the run, 50% of that, this is where, now I'm not saying go blind, this is where the entry will form. It could run a little bit lower, then come back higher, but so it could run lower, come back up, bounce here, and then go. So that's what we'd be looking for in these setups. But for now, don't expect it to just come down here. If it does, it's a gift. This is starting to give support ideas here, right? Can you see this, Sloth?
Yeah.
Yeah, what's up, Smithy? Support ideas here. So,
And that's also and just that equilibrium concept, right? Because I'm considering all of that early February to be like a range, right? So
yeah,
if we tap the 50% of that, I don't expect that to, if we start going below that, I'm going to be more worried that we're going to go lower.
yep.
So
When you see shit like this happening, and price starts to expand, then when price comes back to it, there's already the mindset that when price was here previously, it exploded. So when it comes back, support ideas, we're going to buy it up again. Make sense?
Yep.
And you'll see it in indices. This is one of the concepts that the currency merchant showed and explained to us. If we look here, previous FEG, mark it out in time. When price came here previously, rocket ship. So when price comes back here, support ideas, rocket ship. So same concept, I think, here. Support ideas in the volume imbalance. When it comes back, it should also serve as some sort of support here. Even if it just taps a bit, slightly into this, not completely full, just taps the bottom of that, expect that to happen. So I think you have a track of this one. Set some alarms. The support resistance idea is based around that. Because what you could do is even take 50% of this guy, this ugly wick on the H4. Take 50% of that, because this wick is actually a gap, and we look at 50% of as consequent encroachment. So as price starts to do that, it may wants to bounce off that 50%.
yeah, there's so much going on in this 240s to 250s that that's sounds good.
Because
I bet you if you took a range, that early February range, then that wick down is probably tagged right through the 50% of that.
yeah, it probably is. Let's have a look at it.
But it hadn't expanded beyond it yet, so can't really consider that a retracement to the 50. But yeah, look at that. So I think we revisit that, and I think that's going to be it. I think from there, then we're going up to the threes. maybe up to 4.
Yeah, you have an idea. Whilst this may be propulsion block ideas, right? Order blocks created, broken, the highs become sensitive to price. Like I said, can you see that? It's also liquidity engineering at its finest. Trendline liquidity, right? So this low of this candle, I'm watching it for closes below. It broke high through here. I'm watching this guy get traded through. If it does close below, then this is going to happen. Then this. And if that happens, then what are we watching? Any FEGs being created here. Market structure shift. Pullbacks. Take up the failure swing. May get one more down, not quite sure. But you're looking for that in order to go higher there. What else do you guys want to have a look at? Got about 10 minutes left. Anything you want clarity on? Al dente, anything you want clarity on? Let me just get something to drink. Speak now or forever hold your peace. I think for the guys that are watching TikTok, if you're looking at dollar pairs, then you're probably going to see bullishness in everything against the dollar coming up this week. And then in a week or two, you're going to start to see strength in the dollar and weakness in all other dollar pairs.
So Powell has his Congress testimony, I think. Congress.
This week?
Tuesday and Wednesday. Yeah, 2 days worth of him babbling. So
expect shit to happen.
Depends on what. Yeah.
Expect shit to happen. So, like I said, I wouldn't be surprised if they run it a bit lower on indices. I'm not expecting them to completely retrace everything. I'm expecting them to give us something like this and then run it higher. How much higher is the question? Because this is not what your typical high sort of looks like, right? And we've seen something similar before down here. And if we flip him around, we've seen this sort of shit before. See that? Now, that's what we gotta be wary of. Because if we start to do something like this, is this move up here only just to take the liquidity created here and then roll over? Just like all the liquidity created here was taken out by this guy, and then we get that. See what I mean? So watching that dollar index this week, and where is he? And if he wants to find strength right here where we need him to find the strength, nothing below, which means nothing below here. Because I think in the Discord in the beginning of the week I did say this, and this, right? And we can see that happening. I've got the alarm set off here as well. But then again, market structure shift ideas. Market structure shift OBs get rated, right? So this is the line in the sand right here. Based on what Powell has to say, and the dollar being, DXY being where it is, if it finds the strength here, expect this to be just this, and we roll over. That's all. So, important week, right? It'll also give us direction on what the fuck BTC wants to do, because, like I said, we're still looking for one more lower. And BTC plays its own game. NAS could have been effing around and going lower, but BTC is just chilling, just doing its own thing. And then suddenly you get a catch-up move. So let NAS do its thing. Monday and Tuesday are like probably the worst days to trade, to be honest with you. Wednesdays come in and give you the like the real start of the trading week. If you look at this shit that happened on a Wednesday and the first of the month. So Wednesday low of the week, Friday high of the week. So Monday, Tuesday went sideways. We had an OLR here. So if I was looking for entries long term, where am I then looking? I'm looking for entries to form around here, but I just don't like the way this this price action did what it did. I can understand it from a point that it took the Feb lows out here and then moved away, which in a sense is bullish. But if this could also just be the wick of the monthly candle that heads down lower, right? So all of this is just a wick, and then we start to get the bodies coming in down here, and then the wick down there. You see what I'm saying? So not completely sold off on this just yet, because you can get market structure shift, but that means nothing, because price can just roll over and head down lower. So we can get opposing FEGs being closed above, and you would be looking to long, and then that shit happens. So let's see this week what we get, and we'll take it from there. Any other questions before we shoot off?
I think somebody asked about Ocean. I don't know if you already looked at it.
Ocean.
I think in the Discord.
Ocean, let me have a look here. Ocean, please. Let's have a look. I can't keep up with these names anymore. Is Ocean even something we're tracking? I don't know. Let's have a look. Ocean, okay. On a daily, what do we even say? Kind of shitty PA, hold on. Let's do this for now, right? Let's call that a range. Let's call that the 50. Switch down to a weekly. Right. If you were bullish on ocean, not a problem. There's your market structure shift. OB is below it, inside it, all open or ripe for the taking. So we'd look for a move down later on. On a daily is where we need to start looking here now, right? Let's look at highs being broken. This is one. Where's the candle that broke the high? This guy? Right? And then you can see how it starts to become bearish because the candle that broke the high gets closed below. We would then be looking for retracement. There's your retracement there, above 50%, and then a push down. Now, if I still want to be bearish on this, then I can't have a situation where this happens now, right? Watch this on the daily, Abzal. There's a low here. There's the candle that broke through the low. I'm watching this, the high of this candle on a daily being closed above. We just spoke about this just now. There's the low. There's the candle that broke the lows. There's the high of that candle. If we start to get closes on a daily, so if you start to see daily candles, provided they don't go lower first, if they start to close above this, then I won't be looking at anything. I won't be looking for shorts on this. You'll be looking for lower pricing. And ideally here, below here. So we'll be looking for that before we can entertain any retracement ideas. And retracement ideas would then be same concept, the move up 50%. We'd look for that as the range. There's your consolidation, and that's it. Look to enter around here, lower. Makes sense? Watch this candle's high here at 40.53, 4053. Is that right? 4053. Watch it on a daily being traded above. If it's not, expect the next draw. So we had the failure swings taken out here and here. Watch the next draw, could even be here, because this guy here took liquidity of these candles to the left. So I'd actually look one lower there. Right, that's it. I'll post this on YouTube.
Thanks, boss.
No
Thank
problem.
you.
No problem.
Catch everyone later.
Cheers.